Okay, well, welcome. I'm just introducing myself. I'm Darren Morgan. I'm the Engagement Director here at ESCoE. And welcome. This is the last session of the conference. Boo, isn't it? But I think we're going to start, I think we're finishing strong with a session actually that's a bit different, I think, to a lot of the sessions we've heard over the last couple of days. So just very quickly, brief background to it. In April 2025, the Office for Statistics Regulation published their systemic review of ONS's economic statistics. And then shortly after that, the DEVRO report reported and made some recommendations that ONS should consider as they move forward. In response, the Office for National Statistics developed a wide-ranging plan and has started to deliver it, all aimed at reinforcing economic measurement of the UK's official statistics. So now it's 1 year on from that. And so it seems sensible to take stock about the progress made, where we are in terms of the system, and perhaps even what comes next. And we have a brilliant panel to do just that. On my left, we have Jill Leyland, who, don't mind me saying, has a long career in economics and statistics, both as a producer and a user. She's a former vice president of the Royal Statistical Society and is a member of the committee that sets the Society's policy on official statistics. Jill is also an influential member of the National Statisticians Advisory Panel on Consumer Prices. On my far right is Alison Kilburn. She's the Director of Analysis and Chief Economist at the Department of Science, Innovation and Technology. We have James Benford, who many of you would have seen already over the last couple of days, who's the Director General of Surveys and Economic Statistics at the Office for National Statistics. And finally, we have Rob Kent-Smith, who's the Deputy Director at the Office for Statistics Regulation, and that's the institution that regulates the statistical system in the UK. Very simple format. Each of the panelists is going to talk for around 7 minutes, and then literally we're just going to open it up for questions, and we'll have plenty of time to do so. So if we're all ready, I'll hand over to James to make a start.
Thank you. And good to have this session. So I thought I'd just talk through what's improved, what's still to do, and then how you can help. So what's improved? I mentioned this for those of you who are here in the opening remarks. We've focused in on the core statistics and we're prioritising quality over quantity, and so we've narrowed the range of what we're doing. That is paying real dividends now. So on our surveys, the labour force survey is back to the pre-COVID point in terms of the achieved sample size. The quality of our labour force statistics have been recognised as much improved by both the Bank of England and the OBR. So that's a really good thing. The other social surveys that we have stabilised and started to improve a bit too in terms of their achieved sample sizes. A bit unrecognised. Business survey response rates are actually at a historic high, and that reflects steady move to move those surveys online and the improvements that have followed from that. In terms of the statistical outputs, quite a big, I'd say, improvement on the price side. So we suspended producer prices last year because of an error in that series. They're now reinstated, the production process is stronger, and we're producing them regularly again. House price statistics methods have been improved. The revisions are now smaller with the new methods. And the big ticket one is bringing scanner data into CPI, which was done a couple of months ago. So now on the grocery market, 50% of the input data is from that scanner data based on hundreds of millions of prices. GDP, we've improved the way we present the release and focused our attention now on the 3-month and 3-month change, which was responding to feedback. Had a good discussion recently on how we season adjust the data and the changes we're making there. And I think that was a useful exchange with users. And we've improved methods on R&D, capturing more of the R&D in the economy, and improved how we account for multinationals across the board. And this also reflects many of the things that I mentioned have been years in the train, actually. this also reflects years of work. The IMF recently accredited the UK as meeting the top tier of standards, so-called SDSS+. So that's all great. Beneath the surface, and not mentioned this publicly, but why not? We started running quarterly staff surveys, pulse surveys in the ONS, and the one for this year has shown a very big, significantly increase in staff engagement, and now the staff engagement levels in the ONS are in the top half of the league table across the civil service, which I think is a great thing and reflects pride in what we're doing, I think, and you can see that actually the pride balance for working at the ONS is up by 10 points relative to last year. So that's really good and gives us something to build on. I'm under no illusion there's a lot more to do. And like the biggest, most important thing is getting the transformed labour force survey over the line. We're very focused on that, got top people on that, and I'm confident we can do that by next year. We'll take stock on where we are with our major users in July and lay out the timeline on that. We're bringing in a new business register, which will double the size of the companies that we cover. We've moved to a more iterative approach to delivery there, which is bringing some benefits in early, but there's still a distance to go on that program. And then, we're on the long path to implementing the new macro standards, which we heard just now aren't themselves complete, and we need to think through AI. There's a lot there, and for that reason, we've introduced a waiting room, and I've gone through quite a lot of big ticket items on economic statistics. In addition to that, we've got to do the census coming up in 2031 and reform our website. And so we're not going to take on big additional pieces of work until those big ticket items are safe. We're also thinking through a kind of capability agenda, how we incorporate AI in our work to release efficiencies. So how can you help? So I like the phrase, I like to say, your national statistics need you. And statistics is it's quite a unique business. It's there to reflect the country, the economy back to itself, and it's inherently a team sport. It relies on collaboration between producers, users, researchers, those providing data, citizens, businesses, and it's really important that we get that right. We're trying to be more open, be direct and candid about where the uncertainties are. We're trying to be clear about where the challenges are, what we can do and what we cannot do, and where we're prioritising. And I hope that really creates a strong foundation for a healthy debate. So the offer is there to tell us what you think of where we're prioritising, to get involved, to collaborate, and to constructively criticise what we're doing. And I hope we can have that kind of debate today. So thank you very much.
Thank you very much, James. Nice setting the scene and your perspective. Perhaps I can turn to you, Rob, from the regulation side to share your thoughts on where we are.
Thanks, Darren, and thanks to the rest of the panel. I hope it might be worth me just saying a little bit about who the OSR are, particularly for those who might be joining us from an international audience. So the UK is unique in that it has a regulator of statistics, and our role is to accredit the statistics that are produced against something we call the Code of Practice. And we also have a role in how those statistics are used in public debate. So if they're misused in political debate, we'll often intervene to clarify what the statistics tell us and what they don't. So obviously ONS is of big interest to us as the NSI. When I think back over the year, which is a little bit of a look back and look forward for this, I see this as something that's fundamentally about trust in statistics, trust in the institutions that produce them, and I think some of the challenges that ONS have faced historically have led to a damage to that trust, and some of the actions that they've taken over the last year are beginning a process that will rebuild that trust and confidence in the statistics. And that generates quite a lot of noise. Normally, if you were having a debate and discussion about the quality of economic statistics, it probably wouldn't go that much further than the people that are in this room now. I think we've seen a lot of public discourse, and I think that's because when the statistics are challenging, we really hear about that. We don't hear about that when things are going well and the numbers are ticking over. Then the numbers are the story, not the quality of the underlying statistics. So on that theme of trust, I think following our review, which set out urgent action for ONS to take, the DevRo review, which added a leadership and culture dimension to the work that we'd done around quality, in my mind, there are three parts to trust and rebuilding, and the first of those is leadership. And I think thanks to James and others in the senior team at ONS, I think we've seen a dramatic change in the tone and openness of the leadership at ONS over the last 12 months. More transparency, more engaged, better governance, a more open acknowledgement of the risks and challenges faced, and a dose of realism to quite ambitious plans. And I think that openness is really important. ONS is facing some big issues. We've heard some of those echoed by other NSIs through the course of the last few days as well. And I think to tackle those big statistical issues, an environment where challenges are surfaced, discussed honestly, is really important, and perhaps testament to the increase in staff survey scores that James referenced in his comments. The second is prioritisation. So our original review on this a year ago identified the need for clear choices, being explicit about what can and couldn't be done. I think the plans that were published on in the immediate aftermath of our review and the DevRo review were probably overambitious in nature, and some things have slipped as a result of those. But ONS's business plan, published just yesterday, I think starts to reset that prioritisation to something that is manageable and can command the confidence of users, but also of the staff that are working there. I think when ONS produced their July update, which will include kind of revised plans for their recovery in future, I think that will be a litmus test for users and for staff and stakeholders around whether those plans are credible, whether clear choices have been made, whether there's realistic pacing, and whether it's on a trajectory that builds the confidence of staff and users. So I think that July update is really important when those consequences pass on from the business plan published yesterday. And then the third, I think, is something we could say if we were talking about any NSI, is that there are real underlying statistical challenges. Andre talked about some of those on Monday when we opened, so I think it's a nice kind of full circle moment for the conference. Declining survey rates, administrative data, changing complex economy, some issues in the UK around labour force survey, but some real successes recently. James mentioned a couple there on labour force survey and prices, but real structural challenges that leadership and that prioritisation are really needed to be able to address the things that the system faces. So to conclude, I think this is about rebuilding trust. On leadership, clear and welcome progress, particularly with transparency and openness. On prioritisation, a move in the right direction, but delivery will depend on sustained focus and realism. And then on addressing the statistical challenges themselves, they're deep-rooted, they're globally common, and they're complex. So that's going to require long-term focus to resolve.
Thank you very much, Rob. So there's two people from... Sorry, thank you, Rob. There's two people there from the system, directly in the producing side, and so we've got some user perspective now. I think it'd be useful to hear from you. So Jill, perhaps I can come to you first.
Okay.
And then finish off with Alison.
Well, thank you, Darren, and thank you for inviting me. I agree that things are going in the right direction. I'm neither surprised nor dismayed by the fact that it's taking longer than expected, because I think it's a huge job that you're doing there. And to do all the changes on top of transitioning from legacy platforms is itself, a complication. There are not things you'd normally want to do at the same time. I like the fact that ONS is being more open, and I certainly like concepts like the waiting room, which I think is a very great idea. I want to mention one or two other things that are sort of relevant, and one is the importance of user engagement, and I would like to see ONS build on this by increasing user engagement. And that, as James said, it's a team sport. It takes two to tango. Can't come away from all the cliches now. So I would, those of you here are probably already engaged, but please get your colleagues, your friends, etc., to also start to engage. And there are two particular reasons why I'd ask that. First of all, ONS obviously interacts a lot with other government bodies, particularly the Treasury and the Bank of England. Now, they're both important stakeholders, of course, but they're not the only ones. I get a bit cross when I sometimes see ONS referring to key stakeholders and realise they're just mentioning, they mean government bodies, because other people are important. So it's important to balance that. And the second thing, now, I know there are representatives from other NSIs here, so they may disagree with this, but throughout my career, I've carried out economic analyses of a lot of other different countries, and I do think that ONS gets more criticism and more negative comment than many other NSIs do. Now, criticism can be good if it's constructive, but sometimes it isn't. And we've seen a lot of it in the last 2 years after the Devereux. Oh, you know, they can't get anything right. There was an error in the CPI, which was not an ONS error, but was an error in the information they were given, and they get blamed for that. That's not helpful. So we do need a more sort of engaged and user organisation, a user that will engage constructively. User bodies, user little groups are often voluntary groups, so anything ONS can do to help that. They did at one point second somebody to the Royal Statistical Society, specifically with the point of helping user groups, and if that could be, or if the UKSA might do that again, that would be good. The other point I want to make is complexity. Complexity causes all sorts of problems. It's harder to see what's happening, it's harder to understand, it's harder to see when things go wrong. And you've got a lot of complexity at the moment. You've got the big data sets, you've got administrative data, and administrative data brings all sorts of issues that aren't always immediately apparent. Being on the consumer prices panel, I've seen the hoops that statisticians have had to jump through in order to use scanner data. It also can hide the cause of what's going wrong. Apart from administrative data, you've got the transition to the new systems that are more complex, and you've got more complex formulae often. And that's before we even get to AI and all the points that Carol was mentioning in the last talk. So where you can, please keep it simple. And sometimes simple is good, even if it doesn't mean you get quite such an accurate estimate. Well, that can be balanced by the fact that it's easier to see and to monitor, not to mention it might be cheaper. So those are the 2 points I want to make. One plea, could we think about some estimates of reliability? I don't mean necessarily point estimates, which are probably impossible to do, particularly when you've got something complex like GDP. But perhaps some sort of general ideas. This is a particularly good thing. In the old sources and methods, somebody reminded me during the coffee break, they used to classify things like, A, B, C, D, that sort of thing would be helpful. Yeah. And if it stops people going on so much about a 0.1 rise in GDP or a 0.1 fall, that would be good. And sometime, and this may be something that we have to wait for the new national statistician for, it would be good to have follow-up on the Statistics Assembly. Yeah. And I'll stop there.
Excellent points, Jill, thank you. Alison, over to you.
Thank you. So as a department, we have many hats when it comes to economic statistics. We are producers, we are users, we are researchers. I'm very pleased that in this panel, I'm talking as a user perspective. And I wanted to set a little bit of context, and then I've got 3 points, and I promise you we didn't meet up beforehand to talk about 3 points, but I also have 3 points. So in departments, economic statistics, they're not a luxury, they're not a technical discussion, they're not something that we look at in terms of that is the output. They are a fundamental point of how we do policy making. Without statistics that are stable, that are reliable, that are transparent, that are right, it makes our job so much harder to do. And that's not just in terms of we have to work harder. When we are looking at policy, we use economic statistics to determine where we put our focus. When we are looking at allocation of budgets, we use economic statistics and contribution to economic statistics to determine prioritisation of budget spends across government and within departments. And we also use them to look at impact. You know, are the things that we are spending public money on having an impact on people's lives? And when economic statistics don't speak to that, that's a problem for us as policymakers, but it's an even bigger problem for society. There are some fundamental discussions that are happening within society. In my space, where I'm in the Department for Science, Innovation and Technology, around the use of technology, about the emergence of technology, about how that is playing out, not just in their social lives, which we've heard a lot about here today, but how it's affecting the economy. You are having headline news regularly about how technology is changing the way that the economy works, about how it's inputting into productivity and growth and how it's disrupting labour markets. That discussion is really hard to have when you don't have any economic statistics around it. So that's the context in which I'll be making my 3 points. The first one is to acknowledge the progress. As a user of economic statistics, where we are today compared to where we were 12 months ago is a very different world. And I think there's a number of things that James has already talked about and that I won't sort of go into, but particularly the transparency, the openness, the very clear prioritisation, the very clear acknowledgement of some of the issues. And I know this has been an extraordinarily difficult year. I can say this in a way that James probably can't. It's been an extraordinarily difficult year for people working on economic statistics. And I think the fact that we are doing this at the conference now and having this conversation is not something that we would have been doing 12 months ago. And I think, James, you will be embarrassed me saying this, I think a large part of that has been you. The openness, the blogs, the discussions that we've had, I think are a fundamental step change from where we were a year ago. And then I'm going to come to the but. And you know, we've had this discussion a lot, and I'm not going to say this better than Carol did, I'm not going to say it better than Anna did, but economic statistics are there to describe the world around you. And to the large part of the economy, they do that. Our focus has been on a very narrow part of it. For the large part of the economy, they do that well, they do it reliable. But for my part of the economy, and for the part of the economy that we're talking about, the world in which people see is not reflected in economic statistics. And that isn't a UK issue. That is a global issue. And a lot of the discussions we have are very technical and very detailed. But the fundamental point is our economic statistics do not talk to the world in which we are looking at now. And progress is being made. And that is acknowledged, and we know that. But it means that we need to go. I'm going to steal Andre's line, bigger, faster. What was the other one, Andre? Bigger, faster, better. Because that is a challenge for all of us. We need statistics that talk about the world in which we observe. And that's the final point. You know, this is not an ONS problem. It's not even an NSI problem. This is an economic stats problem. For us to stay relevant, for us to have a voice in this discussion, we need to go faster on what we're doing, and we need to be looking for alternatives. And within DCIT, we play some part in that, you know, in terms of what we're producing and the methodologies that we're using, and you heard that yesterday with the work that the Data City does. We're doing very similar methodologies, and I know a lot of you are also doing that kind of work as well. But this is a collective responsibility, and it is a collective responsibility in which we need to go a little bit faster than we are going on at the moment. So I am optimistic about where we're going, but I think it needs to be active optimism and not something that we come back to talk about the same things next year. Thank you.
And thanks very much, Alison, and perfect timing in terms of the time we have. So we've got around about half an hour left, 25 minutes, half an hour time for questions. And as usual, if you do have a question, we're grateful if you could just say who you are and your affiliation, so we know who's speaking. Who would like to go first? I can see one hand. We'll take a couple. I can see two. I can see three. Here we go. So our first three. I think Bernard was first. The lady in the front second, and then I think it's Tom there. Yeah. So Bernard first. Over to you, Bernard.
Yeah, Bernard Casey, thanks very much. I want to pick up on one point which has been close to my mind, and so it goes to James, and he's probably expecting it as well. You made an awful lot about the fact, you opened more or less with the fact that the labour force survey had got back to almost where it was before COVID. And this has been said a number of times in a number of places. It has probably, but where it had got to before COVID was already pretty low, and one might ask whether this is not a dead cat bounce or something like that. I mean, the real problem is that even before COVID, it was very low, and what is being done to actually improve upon that, and to what extent will the TFLS and its methods of data collection possibly help improve upon that? Thank you.
Thank you very much, Bernard. And there's a lady at the front here.
Hi, I'm Gemma from DBT. I'm an analyst who provides data on economic security and what markets and sectors our business work with. I produce regular updates that go up to ministerial level and that use ONS data. Multiple times over the last year and recent history, there are errors in your data, and a really mean question, but how can I trust your data? I have to go back to ministers and say, I'm sorry, I have to update my publication because ONS have announced a data error. Thank you.
Okay, thank you. And just half. Sorry, Caroline, I'm making you work here.
Sorry.
Yeah.
Tom Rees from Bloomberg. So, James, you were talking about the LFS sample size improving, but when, as journalists look at the monthly figures, like we did earlier this week, we found, particularly comparing what we're getting out the LFS and, say, the payrolls data, we still find it very puzzling to kind of make them add up, particularly kind of in recent months. I was just wondering, particularly focus on what we've seen in the last couple of months, where we've seen employment rise in the LFS numbers, but on the payrolls it's dropping quite sharply. How do you explain that? And I was just wondering if you're more confident in the LFS, is there a case for getting rid of the RTI payrolls numbers? Because I just wonder if they're confusing things at this point.
Thank you very much, Tom. So thanks, Bernard, Emma, Tom. Very nice questions to begin with. James, I think you might have to do a bit of the heavy lifting to begin with, I think. So most of them was sort of, I think, for you to begin with, at least anyway.
It's all right. I was kind of expecting that, so it's fine. Labour force survey, I think it's more than a dead cat bounce. We've put 25% extra people in terms of the field force to get to where we got to. There's a lot of hard work there. We've changed the incentives in the survey, so that's how we've got it back to where we've got to. There is like a few things just to say on this. So I'm confident that in terms of the level of that survey, the headline measures of employment, unemployment, inactivity, it's in a better place than it was 2 years ago, and a better place than it was a year ago, and that reflects the larger achieved sample size, and the fact that I think we've got better at finding employed people because of the investments that we've made. That does introduce a complication, right? Because the corollary of what I've said is that if you look at the change in the survey, then it's a bit confusing because some of the change in the survey is driven by the survey getting better rather than the economy. I think we're getting out of that period where the changes may be reflecting the changes to the survey. We pretty much got there in terms of getting the achieved sample size back to where it was before COVID. And I'll come on to your point. It was an ideal position before COVID towards the end of last year. And so I think we've kind of come to the end of the period where changes to the survey are kind of driving the results. But if you're looking at a year-on-year change, then I think you're probably still see some of that. On the RTI, It's a good measure of employee kind of growth. It is revised, right? It's important to know that. It is revised. We publish data on the revisions. The flash estimate in RTI is heavily revised, particularly this time of year. In fact, we said that in the latest release, that there's often larger revisions and larger revisions upward this time of year. So I think it's important to know that. And we were quite intentional in calling that out, including the quote we put with the release. For me, and we've got work in train that will do this. The important thing, rather than get rid of one measure or the other measure, is to integrate the two. And we had a paper talking about a method for doing exactly that, discussed at this conference, and we plan to publish the results of that in the coming months. Really promising, and that work it's allowing us another way to calibrate the responses in the labour force survey, and very good way of dealing with the problems, which I think are larger in the past in terms of non-response bias in that survey. That's one promising piece of work, and there's ESCoE themselves are doing some complementary work that's very helpful. The sustainable future of our labour force survey ain't the old one; it's the new one. That's digital first. If you can survey without an interviewer, it's much cheaper, and you can get a much bigger sample size, and that's where we're going. There's some technical complexity in getting there, but we've got all the design changes in now, and I'm confident we can make the switch next year. On the errors, I get it. It's got to be frustrating, right? And I think we made far too many errors last year, and too many significant errors last year too. And this is a few things to say that, right? It's good that we're finding the errors and correcting for them, right? And it's a hard thing to communicate at that point, because what you're doing when you correct an error is you've just improved the quality of the data. It's better than it was before, but you've revealed the fact that there was an error, and so sometimes the response you get can feel quite negative. But it's very important that we encourage people to find errors and to correct them, and that's what we're doing. I do think we need to be making fewer of them. Putting more resources into the production of statistics, I think, is helping, and you can see a bit of that already this year. We've made fewer significant errors this year, although I don't want to over-index on that, because I don't want to discourage people to kind of uncover them and then report and correct them. That's what we're doing. Important to say, and I'm not saying this to kind of move the blame around or anything like that, but this is a system-wide issue. The business of producing statistics these days, it's not just our surveys. We're integrating trade data from admin systems. In fact, over half of the major errors made last year were due to errors with source data that were given to the ONS rather than within the ONS. We had a great workshop across the system a couple of weeks ago with all the data suppliers, not just the statistics teams, but those running operational systems in government departments, to say collectively, what can we do to make the system stronger? And I was really encouraged by that workshop, and we will produce an action plan off the back of it. And at heart, right, when you're bringing in admin data to make statistics, what you're doing is you're taking data from a system that was not designed to produce a statistic and using it to produce a statistic. That's a fundamentally hard thing to do in terms of methods, but also in terms of like the design of that process needs to capture the use in terms of producing statistics. And we are looking at what we can learn from the errors last year, and I'm confident we will.
Thanks very much, James. And that was primarily for James, I think, to answer, but I'll just check if the panel want to add anything. No? All good? Okay. Hopefully we'll have a next set of questions. Who would like to go next? Oh, sorry. Brian, it's in the front.
Yes, I'm Eric Bartelsman, professor in Amsterdam. We've heard a lot this conference, and actually every day we heard about AI.
Yeah.
And if I'm thinking of my own work, doing statistical type stuff, I used to work in industrial production statistics and spent 2 weeks trying to get a CSV file into a database format. Now I scan it and push a button, and it's ready to analyze and tabulate. So how are you internally? And I know you have priorities to keep the statistics reliable and to keep them running and to keep the process going. But really, every single employee's work at ONS must be changing right now. How are you quickly trying to see every desk, every worker? What do you do during the day? How am I going to use this technology? Because you must be able to save a lot of time by putting this in adequately. So how do you get the information on how to do that as a manager? And how do you get your staff to take this on and automate away their jobs?
Okay, thanks, Eric. I'll just see if there's any other questions to give James a bit of time to think and other comments. Because actually, I know very quickly, but the comment I've noticed that you have commented actually about how you've used AI in production, which is quite interesting. You've been very open about that. So I know you do that. But let's see if there's any other questions before. Yeah, there's one here.
Hi, thank you for the panel. Javier Miranda, I'm with IWH in Germany, Friedrich Schiller University as well. I've actually worked for a statistical agency for close to 30 years, the US Census Bureau. I'll say I worked on the research side, so we're part of a group of PhD economists all doing research, trying to do cheaper, faster, better, developing new products. A lot of it with administrative data, but also with survey data and new surveys. Not an easy thing to do, cheaper, faster, better, when the cost of labor keep going up. So not easy, nothing that you don't know. But I guess two things. I interacted a lot with the production areas, and producing statistics, as well as I do, is extremely difficult. It's not an easy job. And it requires a lot of knowledge and accumulated knowledge of what works, doesn't work, how to treat the data, how to collect the data. And certainly at the Census Bureau, we worried a lot about losing human capital.
Yeah.
Mm-hmm. And from what I've heard, there's a lot of just built in, maybe fundamentally built into the system, a lot of churning of workers through positions, through departments, and so if I go back to how we produce statistics, the knowledge embedded in the teams producing these statistics was of decades and decades of knowledge, right? And without that knowledge, things break quickly and easily. So just your thoughts on that. The other thing and the other way that we work very well is a little bit of the ESCoE model. So in the research unit that I was in, we interacted a lot with academics, and that helped to conceptualize and develop new products that capture things that are changing in the economy. I think this was brought up earlier. And so, of course, I know you have a whole program with ESCoE, but your thoughts on that as well. Great.
Thank you very much, Javier. I think we'll take those questions, actually. It's quite interesting. Eric, I've viewed lots of questions about AI, but I think it's the first time I've viewed this from this perspective, actually. How would you, if I understood correctly, Eric's questions, and it might be relevant for Alison and Rob as well, actually, is that how do you monitor the use of AI within your organisations? Is it appropriate? Are they leveraging it as best they can? It's an interesting question, so really interested to hear perhaps your thoughts on that one, and then obviously on to Javier's.
Yeah, I mean, I'll say a bit about what we're doing and have already done. And I think the most promising, and this is across the board, I think, in national statistics organisations, obvious application of generative AI is classification. And we've got a very smartly named AI app that's been built in the ONS called Classify AI, that's in production, in the production of economic statistics, in a number of our employment surveys, basically taking free text descriptions of someone's job and turning it into an occupation and industry code. And that is, and we've tested this, giving us better quality, but with much fewer resource. I wouldn't, so the pivot that we need to make at the ONS in the coming years, in part to reassure ONS staff, right? We have a flat budget. We don't need to shrink, but we've got lots to do. So what we need to do is reduce the kind of the resources tied up in our BAE production and statistics, and then unlock that resource so we can do more improvement work and do more of what we have. That's the nature of the problem. And I think that's common to many organisations, is to like reduce the load of BAU and do more change and improvement. And you get like a virtuous circle there, because the change and improvement will give you more efficiencies back. So I think it's really important to kind of come at this two ways, in my view. One is like, let's find those big bets that's obvious, right? And we just go after these problems and find the right solution. So problem chasing a solution, not the other way around. And let's quantify what we're going to get out of that. And we're doing that with that Classif AI one. There are other examples too. For example, the living cost and food survey in the UK involves basically taking 2 weeks worth of someone's receipts and turning that into a coded description of their expenditure. So we've got a receipt scanner application that we've built and we'll roll out there too. So there's those kind of targeted bets, and we're doing that top down. The other is is bottom up. And you can't see everything. So you roll out the tools and you give them to everyone. You make training mandatory to use the tools, and you monitor use and see what comes of that. So we're doing both. And one thing I want to do is lift the lid on some of that in our quarterly progress updates. So I think it's important to show people what's happening there. On skills, I think you're spot on. That there is an issue with skills, and I think it's multifaceted, right? So that there's what you described as domain skills, knowledge of the national accounts and GDP data, knowledge of the labour market data, and I think across NSIs we're finding that there's a layer of extremely senior, experienced people who are kind of got kind of key person risk written all over them. A lot of knowledge is around those people. We've got an approach to deal with that, which is basically a skills and training agenda, like knowledge training. We have a School of National Accounts in the UK, and working to collaborate with ESCoE to scale what we can do there. But it's interesting, we had a workshop across NSIs in the context of the SNA 25 implementation this week and in December also last year. But the number one item on the agenda was skills and how do we work together to build skills across the community. The other dimension on it is the skills that you need to produce statistics are changing because the technology is changing. And so there's an agenda as well to kind of, revitalise what is the toolkit you need to be a modern national statistician, and that's something we're working on too. I think the collaborations you refer to with outside organisations with research is a great way to build skills, particularly when there are constraints on pay and so on in an organisation. And the ONS is very well placed to collaborate because it's got great data, and so it's something we'll do.
Thank you very much, James. I'm going to go, if you don't mind, coming to perhaps Rob on the AI question or the other questions as well.
Yeah, AI was the one that piqued my interest. I think probably 2 points I would make. One is obviously AI, is used in production of statistics, and that creates questions for us as the regulator. I had a question, I think, in the course of this conference about our new code of practice, which doesn't mention AI, which seems to many people odd in the world that we now live in. That was a deliberate choice, not an omission. So we regulate in a principle-based way across trustworthiness. Can you trust the statistics? Quality, are they good? And value, are they serving the purpose that they need to? We think those principles actually extend to incorporate the use of AI. It might be that we need to produce more guidance as time goes on, but we didn't feel the need to change our code of practice. And then perhaps just a personal view, I hear lots of worries about the use of AI in statistical production. So, by far, if there's a conversation about AI with statisticians who tend to generally be a risk-averse bunch, often with quite good reason, given the things that they're working on. My worry is that producers kind of get left behind, and I think the risk isn't AI causes big problems with data reliability. It's actually that the type of efficiency and benefits that James talked about don't get fully realised in what is an increasingly resource-constrained environment.
Thank you. Let's check, Alison, about AI use in DSIT.
I think very similar to James, we have a bottom-up approach where everybody has access to it, they're using it, but we also very much go over what is the specific problem. So for us, a measurement issue around our sectors is a very specific problem in which we would be using AI. But I think the point that Rob was just making there about because AI is so available, everybody's now an expert, right? Mm-hmm. And they're very persuadable, they're very usable. So for us as technicians and experts, I think the bigger risk is that everybody now thinks they can do our job by typing a few prompts into Claude. And therefore, those kind of the knowledge, the domain knowledge of how statistics work, the principles, the standards that you expect, the understanding of the data, and the sniff test, does this look right? Because the amount of things get handed to us and we're like, but that cannot be right because it's come out of AI.
Anything for you on the skills or AI questions before I ask for one final more perhaps?
Nothing much to add really. I would emphasise the importance of people and keeping people happy. One of the depressing things you heard in the Devereux report was that people had raised issues about where things were going wrong and weren't listened to. I don't think that's going to happen in the near future anyway. But yes, it is important.
We've probably got time for a final question if there is any. I'll just give a little pause. Here we go. Jonathan, what a great way to end the conference, huh?
No pressure.
No pressure, Jonathan. Sorry, Jonathan. Thank you.
Jonathan Haskell, Imperial College. There are lots of academics and researchers in the audience who are continually asking the ONS, we want this and we want that, and asking DSIT, we want this and we want that. So let's turn it the other way around. What is it that you on the panel want researchers to deliver back to you?
He didn't let us down, did he? Good question. Oh, no one's catching my eyesight here, but James is going to go first.
There have been many great presentations this week, but I think that for me, if I had to pick a favourite child, the last one from Carol was really quite profound, and the challenge of how we adapt our system of economic measurement to take into account the AI economy. There's the AI stack that Carol took us through, but it's more than that. It's the AI is just one component of production. There's lots of intangible capital within the non-AI producing sector that kind of complements that stack that we're not very good at measuring. Lots of AI is open source, right? So you can build the stack inside the firm. So and the speed with which it's moving is not in SNA 25 properly. We need to move fast to respond. So I think that's the area, and it needs to be a collaboration between producers, academics, but also the technology firms and the firms using it to get that system right. But we need to do it quick because otherwise, on relevance, there's a bit of an existential threat there.
Thank you much, James. What about you, Alison? Got the plea?
That right. We talk about, you talked about upstream and downstream, we talk about verticals and horizontals. We are more confident when we're talking about these other companies that are working here, but how these technologies are being used in the economy and people's lives. We really need to get better at measuring that.
Yeah. And Jill, you're one of these people that actually, these days, Jonathan referred to. How can you help us
How can I help you?
How can you help James? And
James probably thinks he's already got far too much. He has far too much from me. I was actually going to answer Jonathan's question that I think I would like researchers to listen to users and to get engaged with user groups so that you know what users want and what they want from statistics, and listen to them as well as to the statisticians in that. I think that would be good.
Nice. Rob, I think the final word's with you.
Gosh, no pressure. So I haven't got a specific thing. I suppose I would just encourage people to think more widely about impact. So some of the best academic partnerships that I've worked as part of are people that really see the value that making an improvement to core statistics can have, and that might not get people into the sexiest journal, but could have a real impact on the decision making that impacts the whole of the UK.
Okay, thank you very much. Thank you very much, panelists. Can you, everybody, perhaps join me in thanking Alison, James, Jill, and Rob. And I'm just going to hand over to Rebecca for some closing remarks.
So we've reached the end of the conference, and I hope you enjoyed it just as much as I have. The fact that there's so many of you here after 3 days, and for some of you after 4 days, and for some of you after a rather late evening last night, suggests that you have. So I want to say thank you on behalf of all of us to the people who put this together. So first of all, the scientific chairs, Stephen Hansen, Liz McEwen, and Paul Schreier for the brilliant program that they put together. And also the organizers, Sarah Shepherd and Caroline Lewis and their teams. Sarah, conveniently for us, even managed to cancel the tube strike. She's absolutely amazing. We've heard a lot about AI at this conference. And not so long ago, a colleague of mine suggested that I check their algebra because they'd been working with Claude. To which I said, "Who's Claude?" Wondering what was the matter with them. So it felt very timely and important to listen to Michael McMahon's keynote and advice yesterday on how we can use AI to enhance economic data and economic research more generally. And also thank you, Carol, for, as always, very careful and inspiring thinking around how national accounts could evolve to capture the many changes with AI, and providing a measurement agenda as well. The ESCoE Conference on Economic Measurement is intended to promote the exchange of ideas and constructive dialogue to further collaboration between all the many parts of the statistical system, which we've heard about just now. So one example that I wanted to highlight of successful collaboration, which we've heard about at this conference, was the development of new linked employer-employee data by my ESCoE colleagues John Forth and Alex Bryson. John Forth is sitting up there, who together with Tom Wickersham's economic microdata transformation team and at the Office for National Statistics have developed this new tool. And this is a fantastic new tool because it allows us to check surveys against administrative data, look for some of the issues there. And it's also been really useful for creating new aggregate statistics from microdata to tell us about business dynamism and labor market flows. I just wanted to highlight that the fruits of endeavors like this require not just successful collaborations like that at one point in time, today, for example, but over the longer term. And I think that was emphasized by Dan Mawson from the Department for Business and Trade during the session yesterday, where they talked about what could be learned from data on business-to-business transactions. Those efforts were started more than a decade ago and have involved lots of different people and organizations over that time. And now, I mean, this was a session put together by Christina Palmou, who's at the OECD at the moment. Those investments are starting to allow us to map the nature of supply chains, which seems kind of important today. Earlier this week, on Tuesday morning, James Benford highlighted that the constructive dialogue and quality debate that we try to foster at conferences like this between the different parts of the statistical system, which we've heard about a lot in the last hour, and in public discourse, how that quality debate is important, not just for developing the quality and relevance of economic statistics and all the new things we can learn from these new types of data, but also for building trust in economic statistics. And that was picked up by Rob Kent-Smith and Jill Leyland as well. Quality debate rests on a shared understanding of the challenges and opportunities and the constraints faced by the different parts of the statistical system. And so from that perspective, I think that many of us, certainly from the research side of things, found it really interesting to hear from André Loranger, the head of Statistics Canada, about the common challenges faced by statistical agencies and how Stats Canada is dealing with that insatiable demand for cheaper data. I won't mention the other three adjectives. So, and also, you know, we heard from the panel chaired by Diane Coyle on Tuesday, again, my day's confused, about what, you know, all these developments with AI mean for economic statistics. And that was, you know, a statistical agency panel, and it's a very, very different perspective on what can and cannot be done from someone sitting in a university. So I want to conclude with a couple of announcements. Number one, I believe that our conference next year will be in Bristol. That'll be our 10th anniversary. And number two, if you can't wait till then, please join us in Sydney at UNSW in December, where we'll also have an ESCoE conference. And finally, I just want to say thanks to King's Business School and King's College London, and also to the Office for National Statistics for their support for this conference. And thanks for participating, and have safe travel home.